What is going on, everyone? My name is Kenneth Beard and I'm back with another video. Today I'm going to be explaining the stock market indexes, all three of them, what they consist of, and how I use them. So right here I'm using a website, The Motley Fool. I'll leave a link down below in the description. So if any of you want to look further beyond what I'm going to explain in this video, you can at The Motley Fool. They're a very good website with stock market information. So the three major stock indexes are the Dow Jones, the S&P 500, and the Nasdaq. So we go into the Dow Jones here. What is the Dow Jones? Well, the Dow Jones Industrial Average is a stock index that contains 30 of the largest and the most important U.S. companies, right? So we can go down here and we can look at some of the companies listed on the Dow Jones. So you got the 3M, American Express, Apple, Boeing, Caterpillar, Amgen, Chevron, Cisco Systems, Coca-Cola, Disney. And so you see all these companies. These are very big, high-earning companies that are listed on the Nasdaq. They make a lot of money. So we can look at the chart, and you can see whenever we see the Dow Jones in the uptrend or in the downtrend, this is usually the movement of all of these stocks calculated into one. So that's why we see them on the Dow Jones. So the next one, the S&P 500, one of my favorites. And the S&P 500 consists of stocks, the 500 of the largest companies in the United States stock market. So 500 of the largest. Instead of 30, we got 500. So we can look at, Microsoft, Apple, Amazon, Facebook, Berkshire, Alphabet, Google, Johnson & Johnson, Visa, and whatnot. So, we got more to look at when you're looking at the S&P 500 than you do on the Dow. But Dow also consists of some very, very good names and can be used for its weighted average as well. And you can see here, S&P is a market cap weighted index. Its performance is mostly dependent on the largest stocks it contains. So what that means is the stocks on the S&P that are the largest earning, or that may have the largest stock price or the most movement, or just that may be performing the best in that year, those tend to have the biggest effect on the S&P 500 index. And so if you're ever trading and you see that your stock position is just not going in your favor, well, check out your index first. That's always what I do. I look at the S&P 500 if my stock is listed, of course, on the S&P, to kind of give me an overall view of what the market is doing, so I'm not blinded, because the market will drag down a lot of stocks, and usually if you see the S&P 500 in the downtrend, you tend to see, a lot of stocks following that trend as well. So that's a good thing to keep in mind for looking at stocks listed on the S&P. The next one is the Nasdaq. Now, the Nasdaq includes 3,000 companies that are on the Nasdaq Stock Exchange and predominantly focused on technology. So what they're saying there is that most of the stocks on the Nasdaq consist of technology stocks. And so the Nasdaq is just all 3,000 stocks that are listed. You get most of the companies that are listed under the S&P and the Dow, well, all of them under the Nasdaq. So you can see Microsoft, Apple, Amazon, Alphabet, Facebook, Intel, Netflix, PepsiCo, and Cisco Systems. So most of the same stocks, you're seeing kind of the same names over and over again because they're showing you, some of the biggest movers in each one of these indexes. So the indexes, S&P and the Dow really just kind of make it less of a hassle to understand the trend of a certain sector or a certain group of stocks that one may be looking for. If you're looking for larger beta names, you may be going to look at the Dow. If you want to be a little bit less concrete, go a little bit outside of that into maybe some lower price names, then you want to look at the S&P. But if you still want to stay in that, large company earning, high company earning names, you want to look at the S&P. So, that's a good thing as well with the Nasdaq. You can see the Nasdaq, has its own little trend going on here in the uptrend. And so if you look at each one of these charts, they do relatively look different. You got the Nasdaq, and then the S&P, and then the Dow. So, always keep in mind of which index you're looking at, and just know that they all have their own movements and that they are different from each other. Even though they seem to have a lot of the same names, those names will be calculated differently and they're weighted differently. So they give off a different trend or chart. That's what I was showing you there. So I'm gonna go into some ETFs that I watch. And if you ever are looking at being an ETF trader or just an index trader, if you're one of those people like me that really don't look at stocks that much, but like to look at the overall condition of the market, that's kind of what I focus on. That's my niche. Instead of me looking at specific stocks, which I do look at specific stocks, but I trade options, so I like looking at the broad picture of everything. That way I'm not confused, and I'm not in a position that maybe getting dragged down by the market because I'm trading the market. So one of the names that I used to trade quite often is the SPY. The SPY is a lower priced stock. It's trading at $366.30. Right now, that's where it's at, last closing price. So obviously, you can see it. This is an ETF that tracks the S&P 500. And so this is a good one to use if you're ever thinking about trading. They got options here. I like trading the options. Now, not that high price, so very viable, very doable if you're looking at trading those. The next one I look at is the SPX. Now the SPX is a little bit different. Compared to the SPY, the SPX doesn't have a time and sales. It doesn't have, if you're going to trade, you're going to trade based on the technicals, really. Looking at, the SPX. I personally trade the SPX for higher returns because unlike the SPY, the SPX is trading at, $3,000, dollars right now, 3,700, pushing almost 4,000. So you can get some good returns on the options, compared to looking at SPY options where we're getting like $4 at the money 9 days out. You go 9 days out here, you're seeing $31 worth of premium, $26, $31. So you can grab more premium, and it's the same thing as looking at the SPY. So that's why I trade that now. Next one I look at often is the Qs. The Qs is the Nasdaq 100. Don't get that confused. It's not the overall Nasdaq, but it's the Nasdaq 100. So it's pricing the top 100 stocks on the Nasdaq, I believe. Let me look it up, not to be confused. So jumping right to it right here, we can see that specifically instead of including all common stocks listed on the Nasdaq exchange, the Nasdaq 100 only includes the stocks of the 100 largest non-financial companies listed there. The 100 companies in the Nasdaq 100 make up more than 90% of the weight of the Nasdaq Composite Index. So, if you're still looking at investing in the Nasdaq and its overall trend, you're going to want to look at the Qs because, like it stated, they have the top 100 stocks that that have the biggest weight, that have the biggest impact on the trend of the Nasdaq. So the Qs is a very good stock to look at if you're looking at trading the movements of the Nasdaq. So those are the 3 ETFs I'm going to recommend to you. If you don't have to trade those, look into your own ETFs, of course. But I'm going to leave it right there with this video. If you enjoyed, feel free to leave a like, leave a comment, and subscribe, and share this video. And I will be back with you guys in the next one.